Why Zebec, ticker ZBCN, could be a millionaire bet. An overlooked infrastructure play with asymmetric upside hiding in plain sight. Quick note, this video is informational only, not financial advice. While most chase the next 1000x meme, Zebec is building pipes, not hype. And that 10,000 tokens for less than a pizza headline? Price per token is a distraction. The network's utility and cash flows are what matters. Think of Zebec like the unseen fiber that carries the internet, or the water mains under a city. Foundational rails that move value continuously, reliably, and at scale. Not flashy, but absolutely essential. That's the bet. Own the infrastructure layer for how money flows, and you capture value across everything built on top. The project is Zebec Network, ZBCN. Its aim: transform how people get paid, invest, and transact by turning money into a real-time stream, programmable and always on. That unlocks faster payroll, smarter treasury, and smoother consumer payments, all on one set of rails. Today's economy still runs on batch systems and legacy rails. Great for the 1970s, not for streaming work and global teams. It's slow, it's full of intermediaries, and cash sits in limbo for days. That latency taxes workers and businesses every single cycle. Zebec's answer is radically simple. Stream value the way data streams online. Persistent, granular, and instant. What if money moved like the internet? Instantly, continuously. A freelancer finishes a task and sees payment flow that moment. A salaried worker watches income accumulate second by second, ready whenever it's needed. That's the kind of structural shift markets routinely misprice, until adoption makes it obvious. Here's the roadmap for this deep dive. The $85 trillion problem, Zebec's streaming solution, real-world adoption, tokenomics and burn mechanics, catalysts, risks, and my final take on whether ZBCN is a true millionaire bet. To understand Zebec, first understand the $85 trillion bottleneck. Money powers everything, yet the rails moving it lag behind our on-demand world. We swipe, stream, and ship instantly, but value still crawls through legacy pipes most people never see. You can message the other side of the planet in milliseconds. Try sending money with the same speed, and you hit a wall built decades ago. That wall is batch processing. The global system runs on batches. Files are collected, queued, and posted a few times per day, like financial snail mail. That system is called ACH in the US. ACH is the workhorse, moving roughly $85 trillion a year. Payroll, bill pay, vendor invoices. It's massive, but it's not real time. Funds sit between ledgers. That delay creates float. Float is idle money, valuable to intermediaries, costly to users, and the bigger the volume, the bigger the drag. Here's the catch, and it's huge. Batching means cutoffs, windows, and settlement cycles. A few postings per day. Weekends and holidays add more lag. Money moves in chunks, not continuously. So when your employer sends payroll on Friday, you often wait 2 to 5 business days for usable funds. Overdrafts, late fees, and missed opportunities stack up. At scale, that delay taxes households and the economy. Time is money, and the system burns both. For businesses, it's trapped working capital. Cash stuck in transit can't buy inventory, fund growth, or cover payroll. Even a 1 to 3 day lag equals billions of idle dollars. That drag shows up as slower cycles, higher costs, and tighter cash flow. For employees, it's waiting on already earned wages, often bridged with credit or payday loans. A costly stopgap created by settlement schedules, not productivity. And freelancers and remote teams feel it most. Cross-border wires add days and middlemen. Fees eat 3 to 7%. Compliance checks add more time. Work finishes. Money doesn't. Fix the bottleneck, unlock the float. Continuous settlement turns dead time into real-time liquidity. Enterprises will pay for speed and certainty. That's why solving this $85 trillion problem can mint fortunes. And why Zebec's approach matters next. This is the crux of the millionaire bet thesis. Zebec's core edge is simple: money that streams per second, instead of a lump sum paycheck every 2 weeks. Your pay can flow continuously, not in batches. Second by second. Picture it. As you work, your wallet ticks up in real time. 0.01, 0.02 every second. Because money becomes programmable. Payroll automates itself. Streams start and stop by schedule or hours worked. Subscriptions meter usage. Pay only as you consume. Investments distribute yield continuously to depositors and holders. Smart contracts split streams, taxes, benefits, savings, and treasury buffers, with instant auditable rules. Real-time settlement replaces batch delays, cutting float and counterparty risk for teams and treasuries. Utility drives usage. Usage buys and burns more ZBCN, creating a flywheel that can accrue value to the token. Let's shift from promises to proof. Zebec is in production today. Real flows, real users, real payroll, moving value continuously, not just in demo decks. That's the difference that matters. Instead of hype, the platform shows measurable traction. Live employers, live workers, and live transactions running at scale across everyday financial workflows. More than 200 companies, from startups to established teams, have integrated Zebec streaming payments into their operations. And there are over 65,000 active users. Not just addresses, actual people attached to payroll streams and real-world disbursements. Freelancers, gig workers, and employees receive earnings second by second. Income that's usable the moment it's earned. This is compliant payroll in production, fast, automated, and auditable for enterprises. Real utility is only half the story. The other half is strategy. How Zebec grows within, not against, today's financial rails. Disrupting a multi-trillion-dollar system isn't about burning bridges. It's about integrating, meeting compliance, matching standards, and upgrading the pipes from the inside. So Zebec partners don't fight the existing rails. They build bridges, crypto streaming on top of the bank infrastructure businesses already trust, with automated controls and clear oversight. A prime example, membership in the Nacha Payments Innovation Alliance, working alongside the governing body behind USACH to align streaming money with established payment standards. That alignment opens doors, fewer regulatory unknowns, smoother enterprise onboarding, and a larger addressable market without reinvention of every wheel. Zebec also acquired regulated financial entities to connect streaming payroll directly to banking rails. On-ramps, off-ramps, and KYC AML handled end-to-end for compliant scale. For investors, that's the point. Traction plus compliance equals a credible path to scale, the prerequisite for any millionaire-style outcome. Now, the part investors actually care about. The token, ZBCN. ZBCN is capped at 100 billion tokens, a hard ceiling. But the real story isn't supply, it's value capture. It's how Zebec routes real revenue back into the token. Zebec earns from multiple lines of business: payroll processing fees, debit card transactions, super app services, and payment infrastructure usage. A set share of these fees buys ZBCN on the open market and then burns it, permanently removing supply. That creates token sinks, payroll streams, card swipes, super app take rates, driving net deflation if usage leads issuance. As adoption rises and on-chain volumes expand, more fee flow hits the buy and burn. More tokens can be removed from circulation. Supply can shrink while demand builds, though it all depends on sustained real transaction volume. That sensitivity is the millionaire bet. High asymmetry if the adoption flywheel holds. Zebec is expanding beyond payroll into distribution. One surface where on-chain money flows begin and scale. They call it the Zebec Super App, a unified front door for everyday crypto finance. A single platform combining a multi-chain wallet to hold and move assets across networks. Real-time payroll streams you can start, pause, or redirect on the fly. Crypto payments to people and merchants, tap, scan, or send. Debit card spending with seamless on-the-spot conversion. And staking tools to put idle balances to work. Bundling slashes friction. Fewer signups, fewer KYC hops, less app switching, driving higher daily active users and more payment throughput. For investors, One surface to monetize many services. Fees, interchange, subscriptions, supports recurring revenue and fuels ongoing token buy and burn. Nail the UX and compliance, and everyday users get seamless crypto finance, a catalyst for mainstream scale. Reality check. None of this is guaranteed. Enterprise sales cycles are slow. Pilots, compliance, and procurement can take quarters. Competition is fierce. Execution must beat entrenched fintechs and banks across onboarding, UX, and integrations. Regulation can shift. Licenses, KYC, AML, and audits add cost, oversight, and delay. Security is non-negotiable. Smart contracts, custody, and card rails must withstand real-world attacks. Outcomes vary, and timelines can be long, so position sizing matters. Yet the upside is asymmetric if streaming payments become standard infrastructure. Watch for de-risking catalysts, enterprise partnerships, user growth, regulatory clarity, and shipped super app milestones. Then conviction can scale. The next wave of finance is money that moves like data. Continuous, instant, programmable. If that model wins, the rails powering it capture outsized value. Zebec already shows traction. Tens of thousands of users, hundreds of companies, plus Nacha-aligned ACH integrations and a super app front door. And its tokenomics link usage to value via revenue-funded buybacks and burns. Base case, steady expansion in payroll streams, cards, and merchant payouts across partners. Bull case, streaming becomes default. The rails gain enormous leverage, making ZBCN a high-risk, asymmetric millionaire bet for believers. If you want more deep dives into undervalued crypto infrastructure, hit subscribe and stay tuned. And let me know in the comments, which catalyst would most validate this millionaire bet thesis? Enterprise deals, regulatory greenlights, or surging daily active users? Share your reasoning, not hype. This is educational only, no financial advice. Thanks for watching. Drop your take below, and I'll see you in the next deep dive.